I guess the blockchain would be a good way to have a gold standard between the countries of the world, because it would keep them honest, because it was supposed to be an open ledger. But I don't think it will be open to the public, but it will be open to the central banks of the world and treasuries, and they can see who has how much. If a certain country starts printing too much money, doesn't have enough gold to back the money supply, the people can sell that currency, and the interest rates will rise there, and then people will put gold back to work in there. That's how it would work. So yeah, it's possible, but it's only speculation. But I still think they want to have gold as a reserve.
The BRICS nations' pursuit of dollar alternatives has entered a new phase by exploring a gold-backed digital currency. This presents a potential solution to the group's historical challenges in establishing a common currency. Previous efforts have been hindered by China's economic dominance within the bloc, which raised concerns that any shared currency would effectively become yuan-denominated. Market analyst Mario Innecco suggests that blockchain technology could revolutionize the implementation of a modern gold standard, providing unprecedented transparency in tracking central bank and treasury gold reserves. The economic implications of such a system appear significant. Analysis indicates that if half of the intra-BRICS trade adopted this gold-backed digital currency, 1 to 2% transaction cost savings could generate billions in economic benefits. The system's proposed structure would involve tokenized gold reserves stored in secure facilities, with regular audits ensuring accountability and smart contracts managing dynamic currency weightings based on economic conditions and trade patterns. President-elect Donald Trump has signaled potential opposition, threatening 100% tariffs on BRICS nations if they pursue currency alternatives that challenge dollar dominance. This stance adds uncertainty to the initiative's development as the transition to a new U.S. administration approaches. The BRICS bloc's economic significance cannot be understated. It represents approximately 40% of the global population and exceeds 30% of the worldwide GDP, surpassing G7 economic output. Innecco emphasizes that while this blockchain-based gold standard remains conceptual, it highlights gold's enduring relevance as a reserve asset. As central banks seek to diversify away from U.S. Treasury holdings, gold's role in reserve portfolios may expand, reflecting broader shifts in the global financial architecture. The potential implementation of such a system could attract participation from nations beyond the BRICS bloc, possibly extending the group's global trade share beyond its current 18% level. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think the U.S. Treasury and the Fed, they've kept gold at the statutory rate of $42.22 since, I think, 1973. After Nixon suspended the convertibility of the dollar or closed the gold window, gold was fixed at 35, then they raised it to 38 and then 42.22, and they've left it there ever since. And people wonder, why do they do that? Well, I think Jim Rickards said once they do it to basically denigrate gold, to say that it doesn't matter what the gold price is. We just leave it at 42.22. I think it's worth about $11 billion on the Fed's balance sheet, the certificates. So if they revalue, and they revalue to even 3,000, I think gold will explode higher, because it will be an admission that the fiat dollar has failed. I think the ECB, they keep gold on the balance sheet at the market price. So I don't know about the Dutch central bank, but I think, yeah, if they change the statutory rate in the US, and that has to go through Congress, I think it would be huge. I think what they want to do first, because the concentration of gold in New York and London, that the reason why it was such a big concentration is because of the gold standard in the 19th century, early 20th century, and Britain ran that, and it was the empire. So a lot of the business flowed through London, so it had the tradition. And then New York and the US stepped up to the plate after World War II. So I think what it shows is that, the world's moving away from the Anglo-American axis, and they've seen that a lot of times you can't really get your gold. For example, Germany, they asked for their gold to be repatriated from the New York Fed, part of it, I think, not all, and it took like 4 years to get that gold back. Venezuela asked for the last gold they have at the Bank of England, and they won't release that. And and also with 2022, what happened, Russia, Ukraine, they froze all the Russian assets. And so that's how I see that. As to the question about cryptocurrencies or blockchain, I'm sorry, that's possible. I guess the blockchain would be a good way to have a gold standard between the countries of the world, because it would keep them honest, because it was supposed to be an open ledger. But I don't think it will be open to the public, but it will be open to the central banks of the world and treasuries, and they can see who has how much. If a certain country starts printing too much money, doesn't have enough gold to back the money supply, the people can sell that currency, and interest rates will rise there, and then people will put gold back to work in there. That's how it would work. So yeah, it's possible, but it's only speculation. But I still think they want to have gold as a reserve if they're gonna also not hold as many treasuries as a reserve asset. So that's the other thing as well.
The Federal Reserve continued its monetary policy easing cycle in December 2025. The Federal Open Market Committee lowered the federal funds target rate by 25 basis points to 4.25% to 4.5%, following a 50 basis point reduction in September and a 25 basis point cut in November. However, the Federal Reserve's forward guidance suggests a more measured approach to monetary policy in the coming year. The FOMC has notably revised its rate cut projections for 2025, reducing the anticipated number of cuts from 4 to 2. This adjustment indicates a more cautious stance toward monetary policy normalization than previously communicated. Mario Innecco contextualizes these policy shifts within a broader economic framework, noting that the combination of monetary policy easing and increased fiscal spending represents the first concurrent implementation of these measures since 2010. According to Innecco, these policy actions may affect currency markets, potentially leading to dollar weakness. The Federal Reserve's evolving policy stance comes at a critical juncture for precious metals markets. Historically, periods of monetary easing have often corresponded with increased interest in gold and silver as alternative stores of value. Let's get back to the interview.
I think it's a little bit overdone. Maybe there is like buy the rumor, even though it's not a rumor that he won, but it's kind of the same reaction. Buy the rumor, sell the fact. The fact would be January 20th. So I'm not, and yes, there's a lot of good policies that they're talking about. But as I told you before we came on, there's even speculation that they might put tariffs on gold and silver. And that would be good for the price of gold in dollars. And but it just goes to show that tariffs could, in the short term, drive prices higher. And I think Trump's policies could be inflationary as well. I don't think he talks about bringing inflation down. I mean, we saw CPI is around 2.7. It came out today. But even if you bring it down to 2%, we still devaluing the currency. And Trump, up until 2019, he was running pretty big deficits already, like 5% of GDP, 2019, and then 2020, 21. I know there was that event that I don't want to say the whole name, but we went to 15% deficit to GDP. So Trump he likes that, and he likes spending. I think he'll probably do things that will help the economy. But the debt just seems to me a really big, elephant in the China tea shop. And even Trump or anyone else, I think, will have a difficult time lowering the debt and the deficit, especially with where bond yields are and interest rates, and the fact that you could see inflationary pressures. And we're seeing, Andy, that China is reacting to this, the talk of tariffs and maybe even sanctions, by coming out with announcing that monetary policy, they're going to be moderately loose for the first time since 2010. They're increasing fiscal policy. So China is trying to inflate and to try to weaken their currency in order to fight that. So I think there's a bit too much euphoria, and things might change in the next few months. Maybe there will be tariffs. Maybe it will be 10% instead of 100. I've read a book that you probably heard about by Judy Shelton, Good as Gold. And she said the only reason you really need tariffs is because the currencies of different countries they cheat, under a fiat currency system. They print more, they devalue the currency so they can sell things cheaper. But I think the way to go about ending tariffs and having fair trade would be to fix the monetary system around the world. But that's really hard. So I think, he's just trying to position the U.S. But at the same time, some people argue the U.S. has been able to do as well as it has or at least, corporate America and the deep state. They've been able to spend and do whatever they want because the U.S. could, they can print, and countries are, they want to sell things to the U.S. because they need the dollars.
The potential shift toward a gold-backed digital currency by BRICS nations could redefine global trade and financial systems, challenging the long-standing dominance of the US dollar. By leveraging blockchain technology, this initiative underscores the growing appeal of gold as a strategic reserve asset and highlights the evolving role of digital innovation in monetary systems. How do you see the integration of blockchain and gold-backed systems impacting the global balance of power in trade and finance? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.